Hey everyone, how's it going? So today I thought we would look at covered calls. If you're not familiar with what a call option is, basically a call option just gives the buyer of that option the right to purchase a stock at a predetermined price, and that's basically defined by the strike price anytime before the expiration date. So if we're looking at AMD right here, February 11th expiration is 2 days away. Let's say that I owned 100 shares of this stock and I wanted to sell a covered call on it. Covered basically means that I own shares. Otherwise, if you do this without owning shares, you have unlimited risk to the upside. So that's why it's called a covered call, because you need to own stock. But if we want to look at these strikes here, we can look at the 132 strike here. It's trading for roughly about $1.14 is the midpoint. So that means that the buyer is going to pay the seller, which would be me, roughly $115 to purchase the right to buy this stock at $132 per share. So what this means, if at expiration, if AMD is below this 132 strike right here, I will get to keep this premium that I was sold. If it is above $132 per share, that means that I still get to keep the premium, but I have to basically let my shares get called away to the buyer at $132 per share. So if I sell a covered call, I need to be sure that I am okay with letting the stock leave me at that predefined price. So I've had a number of people request ways to scan for covered calls that may pay a certain percentage, I guess. So a couple of things I've done here. I've built a scan for us to find covered calls, and I also have an indicator here that will actually tell you the return on premium for just the call premium if you sell it. So looking at the 132 strike here, it's basically paying 0.83%, and that is the percentage of the actual strike price here of 132. So, we can see the 131 is paying just over 1% here at 138 to 140. And this calculation is actually calculating the midpoint. And I'll actually share this with everyone. I'll actually just copy this and I'll paste it below, probably in the description or somewhere under the video. You should be able to find it. But that will show us what our premium is, and it should work with pretty much any expiration and any contract. One thing about these custom indicators is they can be very laggy and bogged down, so I try not to run them all the time. I do have another video on how to add these custom indicators into Thinkorswim. I have probably 2 or 3 videos. I'll try to leave a link to those as well. That'll show how to add these. But so that's the indicator. Now we want to maybe try to scan for something like this. And the easiest way to do this, basically what I've done is I have edited my cash secured put scan that's been real popular. And we've basically just changed. So the filters we have changed are just delta, and we have gotten rid of the return on risk because the return on risk only scans the put side. And we're going to actually scan by the stock's volatility. So we're going to do a stock filter, and it's going to be the vol index, and that's going to be basically the 30-day implied volatility of the stock. But back to delta, what we want to do is all calls have a positive delta. So what we're going to scan is we're going to scan for some calls that are just slightly out of the money. So we're going to look between the 25 and the 35 delta. And you can actually widen this delta range here if you want to. You can actually go from the 20 to the 40, or you can go farther out, but just know that the wider that you make this delta range here, the more contracts it's going to give you. So right now we can see with just basically 2 days left until expiration, because today is Wednesday, it's still giving us 47 contracts that we could sell covered calls on. And what I've done, the vol index here, basically stocks that have between 50 and 80% implied volatility, they're a 30-day implied volatility, they're going to have close to between 1 and 2% per week on the covered call premium, around a 30 delta. So I've basically built this scan to find a 1% return on the covered call end around the 30 delta, which is slightly out of the money. And I don't really have a reason for why I have set those strikes there, other than the fact that I feel that 1%, even though it is kind of high, we can on Friday sell a call for the next Friday, and we can collect basically 1% and turn around and buy a share of stock if we want to. So we could actually average down. If the stock keeps dropping, we can sell that 30 delta call weekly as the stock drops and kind of average down with it to keep collecting premium. And hopefully that'll lower our cost basis as well. And another thing that you can do when you're targeting 1% is, as long as you're getting 1%, you could actually turn around and you should be able to buy 1 share of stock every week too. So, let's say looking back at AMD here, it's pulling up the 131 call, which is basically 157 to 160. And we can see that AMD is trading for 129. So, we could actually go weekly and sell the 30 delta call and collect basically this greater than 1%. So what we're really doing is we're lowering our cost basis on the stock by 1% every week. So a couple of other things I'll explain in this scan. Bid here, I like to make sure that we have a buyer for our option. So I set it at least 20 cents, so that's $20. You can raise this up if you want, but I start with a lower amount to get basically more contracts to show up. Days to expiration, right now we're just targeting 1 week from 1 to 7. Obviously you can change this to whatever day you're comfortable trading. If you want to do longer term, feel free to increase this to whatever area you want to search for. Open interest, I like to keep open interest at least 100 to 200. I'm doing 200 right now. I was doing 300 in some of my past scans, but I have found if you can get some open interest in the contracts, basically that lets you know that people have been trading them, and that will help also keep the bid-ask spreads somewhat tight. This is kind of wide here. It's 10 cents wide, but we're only 4 cents wide here in this AMD one. So it's at least going to keep them somewhat tradable. We're not going to get the tightest width in the spreads here, but it is going to be at least something tradable that we can trade. Every now and then there will be one that will be real wide, but for the most part it gives us a bunch of stuff that we can at least trade on. But that's why I like to keep the open interest at least at 200. Another thing that I like to do on all of my scans is I want to do a study filter for earnings, and does not have earnings anytime in the next 7 bars. Now, something else that should be noted as far as earnings goes, we can see that earnings is actually listed as bars and not days. So this is actually trading days. So Saturday and Sunday will be omitted from here. So if you're going to be scanning a farther duration, say 35 or 60 days, if you set this to 35 or 60 bars, it's going to go out 35 to 60 trading days. So you are going to want to account for that. Since we're doing, shorter duration here, Monday through Friday, if I enter this scan on a Friday, it's actually going to scan all the way to the next Tuesday or Wednesday for earnings because I have 7 bars here. So that's just something to take note of right there. So, let's say that, this implied volatility here is too high. And it could be for a lot of people, or you just do not like the stocks that we have found. You can find a stock that you're comfortable trading. A lot of people are comfortable trading Apple, or, just another stock like this. And if we want to find stocks that are going to pay a very similar return to Apple, we can see that Apple at the 30 delta here, let's wait for this to load. Like I said, these custom indicators can be slow to load. Okay, so it's finally loaded. So we can see that Apple is going to pay roughly 0.3% over the next 2 days at the 30 delta level. So if we want to find stocks very similar delta to Apple, what we can do is just look at Apple's implied volatility, which is 28%. And we can go back to scan, and we're just going to do from 25 to 35. And now it's going to give us, there's Apple right there. It's bringing up the 177.5, which is the contract that we were just looking at. So that's, that's how you can scan for different stocks. You know, find a stock that you'd like to trade, see what the implied volatility is, and you know, you can go in the trade tab to see what that is. Just it's right down here under today's option statistics. It'll show you the 30-day implied volatility, and you just enter that, and it's going to give you a bunch of other stocks that have very similar implied volatility. So you know, we can see Amazon, Google, Visa. So that's how you can do that. But one last thing that I like to do, and this can be very helpful, is I like to save my scans. I'll save them as options, and basically we want to show, you know, a pretty large number, at least 250 or 200. I've been setting actually all of mine to 1,000 here lately, but I want to save one scan as options, and then what I'll do is I will save another scan as stocks, and then once I've done that, I will have basically 2 scans that I can pull up, and that makes it easier just to filter this stuff. So you know, you see I have 1% covered calls and then 1% covered call stock. So this one here is going to show me, you know, just the contracts, and then if I go back to it, and the 1% covered call stock is going to give me just those stocks, and that makes it easy to filter here. And also, don't forget, you know, you can also add your own, you know, directional indicator, whatever you like here, if you want to do that as well. But anyway, thanks for watching. Hopefully this was helpful, and have a great day.